Hello, everyone. Thanks for joining us today on this live stream. Today, I wanted to welcome my very special guest, Keith L. Jones, CPA, licensed certified public accountant, and expert in all things regarding tax resolution services. These are problems people have with the IRS, such as with liens, levies, wage garnishments. He specializes in offer and compromises, which is, if you didn't know, settling your IRS debt for less than the full value. In general, helping good people like you resolve their IRS tax problems. Welcome to my channel, Keith. How are you today?
Good. How you doing, Noel?
Oh, I'm doing great. I'm doing great. So if you don't mind, tell us a little bit about yourself and how you got started in tax resolution or representation services, as some prefer to call it.
Well, I've been working for myself for about 20 years now, and I guess about the first 10 or 12 years were just a traditional tax firm, and I tell you, tax returns, I believe they're a necessity, but they're really a commodity these days. And so I started out in the tax resolution business by doing lien letter mailings for people who had federal tax liens. And I had a couple big successes. I know that one of my earlier ones was a gentleman who was a trucker for Room to Go. He owed $330,000, and we got him out for $33,000. So I seen right away, people, it's kind of like somebody when they got an IRS problem, they have like a bad toothache, and they want relief. And if the Internal Revenue Service gets a hold of you, you've had it. You need some help.
Yeah, definitely. Tax resolution services or getting help from a qualified tax professional, in my opinion, is underrated. I think a lot of individuals are intimidated by the process. A big fear is with the IRS, and and there's a lot of bad companies out there who say they can help you, but you can go down the path with them. You've heard and seen these tax resolution services that advertise on the radio and on TV. But I've seen firsthand that people that I've spoken to didn't get the results that they wanted. Usually they got on some sort of retainer and they were paying money, but not seeing results.
Yeah, I think some of those larger companies have given the industry a black eye. And even before I got started, they had some people who went to prison. But I think
oh yeah,
some of these big larger companies, when you make a call to them, you're gonna speak to a salesperson, not to an enrolled agent or CPA or an attorney. And there's only 3 people who can represent you in front of the IRS. That's an attorney, a certified public accountant, or enrolled agent.
That's right.
And so these people that you're calling and speaking to are just selling, and they just want to close the deal. Whereas if I provide, when you call me, you talk to me, and I'm gonna screen you. Actually, Noel, you're gonna get screened before you ever get to me, because we're gonna ask 4 qualifying questions. Does the IRS claim you owe $10,000 or more? Are you facing wage garnishment or bank levies? Or getting threatened letters, or you've been audited? So if you're not getting one of them things, you don't even get to me. So we screen them out a couple of times. So the tax resolution we're talking about is not somebody took my dependent, or I ain't got my refund timely. These people are in trouble. I'm dealing with a gentleman now he's about 74 from New Hampshire, believe it or not. And it's been an ordeal. Oh Lord.
Wow. Yeah.
Let me see here.
Did your camera just go out?
Yeah, let's see. I don't know what's going on here, Noel.
That's okay. I'm going to go ahead and share my screen and move into the slide deck that I have here. Hang on one second. Okay, Keith, are you still there or did I lose you? All right, I think I lost you, Keith. Try to get back on the stream using that same link and I'll let you back in. But in the meantime, let me go ahead and read this disclaimer. We're going to talk about taxes and standard disclaimer. The information in this video is for educational purposes only. This is not legal tax or financial advice. So here we go. Keith is back.
Yeah, I think I come back.
Okay, good. I think we could see and hear you.
Yep.
Okay,
Yep.
excellent. So moving into our the slide deck that I have up here. Did you see my video on Hunter Biden's tax problems?
Oh man, I tell you what, he seemed like he got a sweetheart deal.
Yeah, I think so. So that video was titled "What the Hunter Biden Tax Evasion Case Means for You." And if you didn't know, Hunter Biden agreed to plead guilty to 2 counts of willful failure to pay federal income tax in violation of Section 7203 of the U.S. Tax Code. And that covers a variety of offenses, including failure to pay taxes, which is what Hunter Biden was apparently guilty of. So in 2017 and 2018, he failed to pay over $100,000 in taxes, but he eventually paid that in 2021. So what do you think that? How do you think that?
It was real money. It was real money. It wasn't just a little bit either.
Yeah, $100,000. That's a good chunk of change, but he eventually paid it. So I think that's what surprised a lot of people, because you know, a lot of people have outstanding tax debt, and they might pay it late, but they don't think they can go to jail for that, right?
Well, it's interesting. I'm writing a blog article. I'm just about through with it about can you go to jail for not paying taxes? And,
oh, okay.
So I've got to optimize it, but I was writing that exactly today. But you know, there are a lot of people who went to jail for less than what Hunter Biden did, to be frank with you.
Interesting. Yeah, I can't wait to see that article.
Yeah.
When is that coming out?
It'll probably be out later tonight or in the morning.
Okay, very good. So if anyone has any questions, feel free to leave any questions, even text questions, in the chat. We'll try to get to them. But moving on, we've got this post that was from Reddit, and it's really interesting. I actually, I'm in the process of making a video on this, but the question is, why doesn't the IRS just send you a bill stating how much you owe? And so in 2021, I looked this up. There are about 45 countries, including Germany, Japan, and the UK, that have this process where the tax agency in those countries will pre-populate your tax forms for you. You can go online, you can see the income that was reported on your behalf, and it'll calculate a tax bill. What do you think about that? Do you think that something or a system like that could be coming sometime to the United States via the IRS?
I think you know, I spoke with a guy who's expat. He sold CPA firms. He's moved to Portugal, and they actually have to give tax information every time they go to the store. So I think we have the technology now where the IRS just sends you a bill for the bulk taxpayers. Not talking about everybody, but the bulk of them, the people who are having the, you know, TurboTax built how many millions of people out of thinking that something was free, and then all of a sudden they had to pay $200 or $300. You know, there was a big
Yeah,
Class
they
action lawsuit on that.
they
But
got sued for that and had to pay some big bucks to get that settled.
but I tell you, when we got technology for it, I think we could do it today. But I think it's our cultures. You know, we used to in America filing taxes, and to not file them, I think would be a bold move, but something that's very doable.
Yeah, no, I agree. So let me ask our live stream viewers: would you guys want to see a system where you could view your pre-populated tax return, maybe log into the irs.gov portal, have the tax return generated for you, and click whether or not you agree or disagree? Maybe you need to add some deductions, credits, or expenses, but for the most part, the tax return would be pre-populated for you. I think that would be a fantastic idea. Let us know what you guys think.
You know, I didn't even take it as far as you took it, Noel,
Mm-hmm.
because I think we tend as professionals think everybody's got a computer, but a lot of people don't even have a computer. They walk around on their phone using their phones as computers nowadays. They don't even have a
Sure.
laptop. I think that is, I know, like my little sister, for example, she don't even have a computer. There's a lot of people that don't have a computer, but I can see the day when we just get sent a bill, and if we agree with it, we don't do anything. If we don't agree with it, then we respond back to the IRS. So I think the first thing you might see is something like it be like a confirmation letter, um, negative or positive confirmation. So if you don't have any problem with it, you don't do anything. You just wait for the refund to be issued or pay your bill when it's due. But if you do have a problem with it, you speak up.
Yeah, yeah, definitely. I think that system could totally work. I've read a story where some guy in Australia, it took him about 5-10 minutes to do his tax return. The information was right there on the MyGov website, and he filed his taxes, and his refund was direct deposited to him, and it only took about 5-10 minutes.
Yeah, that's one of the reasons, Noel, I got out of doing taxes and got into resolution because
Hmm.
I think it's a dying breed.
I think it is a dying business. You're absolutely correct, especially with AI and ChatGPT. I don't see why ChatGPT or something like that couldn't prepare your taxes for you. You just enter your basic tax information for probably a good, 50, 60, 70% of the people. I think it would work.
Yeah, I think you might even find out it's higher than that, Noel. I think it'd be
Yeah, yeah,
80 or 90% of people.
definitely, definitely. Keith, let me move on to another question here, and I want to showcase your expertise. But let me ask you, in your opinion, what's the best way to avoid having tax problems
Well,
for
I
the
tell
average
people,
individual?
you know, um, separate bank accounts would be the number one thing that I would tell people. You don't want to commingle your personal with your business, and you don't even want to
Absolutely.
commingle two unlike businesses. So let's say you had a rental business, maybe
Hmm.
a couple rental houses, and maybe you're
Yeah.
a painter. You don't want, in my opinion, you want to keep it in separate shoe boxes. You know,
Right.
we were we used to have stuff brought to us in shoe boxes. Now it's in an electronic shoe box, which a lot of times QuickBooks. But I think not commingling your personal funds with your business funds is a big step. I know most of the people that I'll give you an example. I have a gentleman who hasn't filed, man, I bet in 10 or 12 years, but we only have to go back 6 years for administrative purposes. The statute
Hmm.
says is the statute and the rule says it's unlimited statute. That means that the IRS could go back as far as you hadn't filed, 20 years even. But for administrative purposes, you only have to file the last 6 years. Well, 6 times 12 is 72. So if you hadn't filed your taxes and you got a small business, you probably hadn't done your bookkeeping either. In this case, This gentleman has one bank account and 4 credit cards, and we got to do 72 months worth of bookkeeping before we can even do his tax returns. So that'll probably cost him more than the tax resolution, So getting a good bookkeeping system, not commingling your funds, and I think nowadays, I know Intuit is a company everybody loves to hate, and I don't care for myself, but they got a good product,
Sure.
that I don't think anybody on the market can compare with their QuickBooks Online, and they're just about bookkeep itself.
Mm-hmm. Very interesting. Yeah, I think your audio cut out there at the very end, but yeah, definitely, I completely agree with you. If I were just to add to that, the best way to avoid having tax problems, from my point of view, always filing your taxes and paying your taxes due, and not ignoring IRS tax letters if they should come. And
well, the thing about it is, Noel, I think a lot of people might prepare their return, and then when they have a balance due, they don't have the funds to pay it, especially if they're sole proprietors, and they just freak out. And then 1 year turns into 2 years, 2 years turns into 3, and it snowballs on them. And before you know it, they hadn't filed in several years. And I think I've told people this, that if you file it and you put down you owe $1,000 on your return, the IRS does a pretty good job of collecting that, because it's run by what I say computers. It's going to spit out those notices by statute every 30 days or 45 days. That's the normal collection cycle. I think about 4 letters come to you before they put a lien on it. But it's all by statute. But, we, it really, you need to file your return whether you can pay it or not, is what I'm trying to say. Okay. And then you can get in a payment plan. And one thing I like for the listeners to take away, the viewers, is if you have $100 bill, it's very important that you stay compliant going forward. And you can't spend $100 on your current taxes and the same $100 on your back taxes. And a lot of people I see try to catch up on their back taxes, and they don't pay their current taxes. But my feeling is, you need to pay your current taxes first, and if there's anything left over, then you pay your back taxes.
Oh yeah, that's a great point, and probably not counterintuitive, because after 10 years, as long as nothing has caused the deadline to toll, tax debt falls off after 10 years. So definitely stay current with the taxes, and maybe you might get lucky and run out that 10-year clock, right?
Yeah, I know when I first got into tax resolution, Noel, they was the IRS hardly would never let a statute run. Now it's commonplace, and I guess over about a 10-year period, when I first started, they would if it comes close to the statute date coming due, they would really hound you. But now they send it to a third-party collection agency, and that it's commonplace for statutes to toll to expire, where it wasn't in the past.
That's interesting. Yeah, I've noticed that as well. When do you think that started? I personally noticed that pre-COVID, or when they started the third-party
5 or 6 years ago, probably. I noticed
5-6 years ago.
Yeah, and that's one of the things that we do. If you don't qualify now, offering compromise, you have to exhibit a financial hardship. Okay, if you can't establish a hardship, then you have to pay an installment agreement. But one tactic we use is what's called a partial pay installment agreement, and that's where you pay on the debt, but you know that it's not going to go away. It's going to expire before you get it paid off. So let's say, for instance, you owe $100,000, and it's going to fall off in a year. Well, you might make payments of, say, $2,000 a month. Well, you've only paid $24,000 for the year, and you have $76,000 fall off at the end of the year because of the statute run. I know that
Right.
I had a client, he owed well over $100,000, and we kind of drug our feet a little bit, and we seen kind of what the IRS is going to do. Next time we pulled the transcripts, just about every bit of that had fell off. So that's a good tactic to use, is let that statute run.
Yeah, that's definitely a great point. And anyone watching, if you or anyone you know has IRS tax problems, just know that there are solutions out there that you definitely don't know about. But tax professionals like Keith and myself, to a lesser extent, we know these strategies, and we can help you get those. We can help you get the tax problems or tax debt resolved. There are some options out there.
Yeah, it's
But
kind of
anyway, Keith,
interesting. A lot of people think that people that don't pay their taxes are cheats, or because they might pay their own timely, but they have most of the people that I've never really run across anybody that's a bad person. They just had something come up in their life that prevented them from meeting their obligations, and like I said, they didn't do it purposely. Most of what you'll see, and but there is a solution for every problem, and that goes not only in taxes but in life. And something always good comes out of something bad.
sure. Yeah, definitely. Let me move on to this next question here I have for you, Keith. It is, what should you do if you haven't filed your tax return in several years?
Noel, that's a good question, and I think the way I solve tax problems, it's 3 steps. The first step is, if a client comes to me, they may not. The most of the time, they don't even know what they filed and what they hadn't filed. So they scratch their head, maybe 19, or they don't even know what's been filed and what hasn't been filed. So we first get a power of attorney, and we contact the IRS, and we ask them to call us dogs. In other words, don't take any kind of adverse action against the client while we're trying to get this thing settled and get our head wrapped around it. And then under the Freedom of Information Act, we then pull, using a software program, all the transcripts and account records that the IRS has on you. So I personally go back to about 2010, to make sure everything's so if you engage with me, we'll clean you up right, and we don't just peck at it. We take a whole world view of it, and but the average person don't even know what they filed and what they hadn't. So what you do if you haven't filed for return of years, the first thing I would do is pull my daggum IRS records and see what years I owed, and I wouldn't just peck at it. I would get the whole thing done at once.
Oh yeah, right. You definitely have to look at all the transcripts and see what was done and what wasn't done, and establish your plan of attack.
Yeah, and I think one of the things that's important too, Noel, is a lot of people may have let's take a musician. He has 1099s reported to him, say of $70,000, but he may have put $100,000 in the bank because of there was some people he played music for that did not issue a 1099. So therefore, it's incumbent upon you to really reconcile those bank statements to get all your deposits, whether it's reported to the IRS or not, because the very first thing you do, the IRS does under audit, would be to take and do what's called a T account. They're going to take all your deposits and they're going to match them against what you reported as income. And if there's a difference, it's going to be unreported income. And it's something you and I could do probably in about 2 hours, and it's going to take you about 2 weeks to do it.
I remember T accounts back in college, and I still use them. They come in handy. Let me go on to this question that was sent in by somebody on Facebook, Dave McGuire. He asked, what are the best ways to reduce my taxes? What are the best ways to reduce my taxes? Any thoughts on that, Keith?
Well, that's kind of a broad question. We need to know more information because if you're a W-2 employee, if you're a W-2 recipient and employee, there's not a whole lot of deductions you can take nowadays. They cut out the unreimbursed employee expenses. They did away with that. And so you really don't have too many choices. I tell people they need to max out their 401ks.
Sure.
And if they have like a medical savings account or they need to participate in any kind of tax deferment or tax employee benefit plans that it can. And I think so, it'd be retirement, medical stuff. That's about maybe some tuition credits, but you don't know. You can help me out a little bit. There's not too much an employee can take nowadays, is there?
Yeah, for the average person, I agree. There isn't a lot you can do besides maxing out or taking advantage of your employee deferral opportunities like 401ks, maybe HSAs, FSAs, or whatever else they might offer. Contributing to a Roth IRA is also a good strategy for maybe long-term wealth accumulation, something else to think about. And I don't know if he is or he isn't, but if Dave was a business owner, one thing I think is often overlooked, and you alluded to this earlier, is making sure you have a proper bookkeeping system in place to capture all the income, reporting all of that, and capturing all of the expenses and making sure you don't miss anything. You don't want to overstate your income. You don't want to understate your deductions or expenses, as you well know.
Yeah, I think if you don't reconcile that bank statement, and it takes some work, it's not easy to do, especially if you didn't do it to start with. It's a lot easier to do it all alone than it is to go back 5 or 6 years. But many, many times people, when I first started in this business, people used to come to me with a piece of paper and say, here's my income, here's my expenses. And I used to just whip a return out. And then it dawned on me, I mean, you probably face the same thing. And then I started requiring the bank reconciliations because they've actually had a guy that was a mechanic over in Panama City. And man, I tell you, he had a lot of cash transactions, and he was going to be audited. He was audited. And I told him he was coming with a helicopter. And believe it or not, he was able to get all the receipts together. I think he spent about 2 or 3 weeks mashing out receipts himself. And the auditor come to my office and spent about 2 or 3 hours on it, and no change the audit. But I tell you, yeah, he had not only, like you said, misrepresented his income, but he also misrepresented his expenses as well.
Yeah, definitely. We've got a couple comments here. Let me put these on the screen here. CB350F says, it's crazy that you can get away without paying taxes for 10 years. Then you don't have to pay it at all, ? If this is the new reality, why even pay taxes? Yeah, that's just the way the statute's written. The IRS has 10 years in which to collect a tax debt after the tax has been assessed. So, you can't always get away with it, but it is a strategy to try to run out the clock.
And I tell you, the I think back in the Obama days, there was a little what I call boxing match, or for better sake of words, a little pissing match between the executive branch and the legislative branch, and so the IRS wasn't funded for several years. I think it started when these super PACs were created by these different parties, and they were set up with nonprofits, and the one party had the other party investigated by the IRS, and so the other party clipped the IRS's wings. And I think that's what started the downfall, quote unquote, of the IRS.
Yeah, definitely. But with the new funding they received and headline hiring of 87,000 new agents, you would think that, once these agents get caught up to speed, that this 10-year tolling would be, this 10-year statute of collections would be adhered to more by the IRS, because it's money they're potentially losing out on, right?
Yeah, there's such a thing called a tax gap, and it hadn't been measured in quite some time. And the tax gap is the amount of revenue that is collected versus the amount of revenue that should be collected. And that number is quite huge. So the IRS doesn't collect near what it has coming to it anyhow. Under, the Congressional Budget Office does projections of income, and so they don't get half what they got coming to them, in my opinion.
Yeah, no, I agree. Most definitely. So real quick, I wanted to mention that as a gift to our live stream small business owner viewers, I've got this ebook that you could download. It's 10 tips to simplify your taxes. You can check that out, download it for free at simplifyyourtaxesebook.com. So feel free to check that out. Let me go on to the next slide here. Thomas Howe sent a message here. He says, how long should I keep my tax return records? What are your thoughts on that, Keith?
Well, the IRS audit statute is for 3 years, but I would recommend, especially now with you being able to save your return digitally, that you keep it longer than 3 years. And I would say, to be frank with you, keep it forever, because it's not going to be in space like in boxes and such as that. But 3 years would be the audit statute. And I think you said 6, maybe 7 years. If there's fraud involved, they can come back on you. So
if it's a significant error, 7 years.
Yeah. So
fraud, forget about it. They can come after you forever.
Yeah. So, but it's normally a 3-year statute on audits, because they go back 3 years, and then but if there's something unusual like fraud, they can go back forever, and if it's a larger understatement, they can go back more than 3 years.
Yeah, I agree with you there on scanning and digitizing your tax documents, your tax records, and keeping them forever. It doesn't take up any space, and you never know when you might need it. I've heard crazy stories. Well, a crazy story where I think this is Joe Cass's story, actually. You know who Joe is, right?
Who's that?
Joe Cass.
Yeah.
Yeah, so he had a story that he shared. One of his clients, and he insisted for his clients to save their tax documents as long as they could. He had a receipt. Well, so this person, I don't know if it was a client or somebody who shared a story with him, or somebody that he knew. He was accused of a crime, and because he had a receipt via a tax document to put him somewhere else, he was able to use that documentation as evidence that he couldn't have committed the crime.
Yeah, I believe it. And,
so you never know when you might need these tax records.
And like you say, they're not taking up any space. So if I've got I've got records back 20 years from my clients, old clients, but I've kept everything. But I started out paperless from day one when I started my business.
Oh, good for you. Yeah, paperless is the way to go. Paperless is the way to go. Let me move on to another question here. Mary Carmen asks, up to how long can I be audited by the IRS? We kind of touched on this, but you care to take a stab at this one again?
Yeah, and I'll tell you one thing that not to it's they have a 3-year statute of limitation, but one thing I like to tell you viewers is if you are audited, you get a letter saying you're going to be audited. I tell you, I wouldn't try to do it on my own because once you break an egg, it's broke. And I do a lot better job of representing people when it come to me with a letter and they hadn't talked to the IRS or the auditor, because I like to pre-audit the situation before I give one document to the IRS. But if they've already made a mess of it, I tell you, it's hard to clean up, almost impossible.
Oh yeah, I completely agree. You and I, we know what the IRS is asking for. We know what they want to see, and we give them what they want to see, nothing more, nothing less.
Yeah, and I tell you, it's like I give it just akin to appearing in court alone. You know, I think most of you viewers wouldn't dream of doing that, going in front of a judge without an attorney, and I don't think you should go in front of the IRS without a tax professional.
I couldn't agree with you more, Keith. I couldn't agree with you more. And speaking of audits, another hot topic audit area that is we're going to hear more of, as you probably know, is employee retention credits, which is an up to $2 trillion fraud that the IRS is aggressively going to go after in the near future.
Yeah,
what are your thoughts on that?
Career, seen the IRS put out so many notices about one issue, one topic, and I think they've warned taxpayers at least 3 or maybe 4 times, put out publications saying that if you took this credit, you better have it coming to you. And I think that there's a employee retention credit meals, quote unquote, where that they take these credits and I think it was about $26,000 a piece. But to me, you may even have it coming to you, but you still may face an audit but nobody wants to go through an audit. So you got to leverage, you got to think, do I want that little bit of money or do I want to risk getting audited? I know I have one client that he may have it coming to him, but I haven't recommended that he pursue it because it may open up a can of worms.
Yeah, that's definitely something to consider. And it's a big hot topic right now. For those business owners who claim the employee retention credit, and a lot of them maybe didn't realize at the time what they were actually getting into. A lot of these ERC mills were having the clients self-certify, meaning they would sign off that the information, basically the ERC calculation, was correct. They're signing off on it themselves. The ERC mill may have done a rough calculation and it may or may not have been correct. And they may not even have filed the 941X payroll tax returns, which is how you claim the ERC refund.
It's interesting, Noel. I've got a client that's out of Dallas, and I hadn't figured this one out in my head yet, but he failed to pay in his payroll taxes, but yet he took the employee retention credit.
Oh boy, wow.
And got it. But now what's hanging out there, so at the end of the day, the tax wasn't due because it washed out, but there's penalty and interest where he didn't pay it initially like he should have. And it's
Yeah.
quite a substantial amount. Because we talk about employee taxes, employment taxes. That's the easiest loan, Noel, that a business owner could take. When I say loan, I was taught this. They can not pay their what they withhold out of employees' check, and for your viewers that don't know, the employer withholds federal tax. In some cases, where state tax, he would withhold state withholding tax, but then he also has to pay 7.65% employee Social Security and Medicare, and then 7.65% is withheld out of the employee's check. So all that has to go to the IRS. What you withheld, as well as what you have to do on your side as the employer, and if many times I see where small businesses have got in a cash crunch, and they decide they won't send the money in, and that's the worst way to get into trouble.
Huge mistake.
Easiest way and the worst way as well.
Because
there's something called a trust fund penalty, and that's part that you withhold. Say you're a business owner, and you withhold money from your employee, and you don't turn it into the government. They can come at you personally and assess what's called a trust fund recovery penalty. And so that's not the portion that the company owed. That's what was withheld out of the employee's check. And that's pretty common.
Yeah, they can go after the owners personally, and also any responsible parties. That could include internal bookkeepers, accountants, secretaries, or I'm sorry, not secretaries, but administrative assistants, if they were in charge of remitting the funds.
Well, I think, Noel, for your viewers, if somebody is facing that issue, they need to really be a responsible party. What I mean by that is, let's take a bookkeeper or administrative assistant. Maybe they even signed the payroll checks. Maybe they produced them, but they didn't have the say-so where the money got sent in. Okay.
Sure. Right.
The IRS may come after them, but if they're represented and we can prove, we fight that penalty, trust fund recovery penalty, pretty vigorously. I do myself.
Yeah.
And because in my eyes, one person is responsible. Okay, the buck stops here, and it's usually going to be the owner of the business.
Right.
I don't really agree with assessing to somebody like a bookkeeper or administrative assistant. That just don't seem right to me.
Yeah, that's a good point. They will go after anybody and everybody, but if the person gets proper representation, they can be protected.
Yeah.
Let me ask you this, Keith. Going back to ERC, I didn't really research this, but I didn't have a definitive answer when I was casually looking for the information. But let's say a company received $100,000 in employee retention credits, and later they closed the business, but later the IRS determines the fraud was involved and they want the money back. Do you think they can assess the responsible parties or the owners personally like they can with the trust fund penalty?
Well, it's going to be interesting to see, because I'm of the opinion that the IRS is coming, because these credits were worth $26,000 per employee. So you can imagine somebody had 50 employees, they might have got 26,000 times 50, or even 10 employees. So it's big money. And
sure, huge money.
If a lot of these businesses, as you know, were shuttered after COVID, they may have gotten the credit 2 or 3 years ago, may have needed it, and like you said, may have thought they had it coming to them. But I think they're going to have to prove it before it's all over with. And it's kind of funny. I sent you the email today. I don't know if you like me, but I get emails all the time about people ERC wanting my clients to apply for them. So what I started doing is sending them emails back saying, "How about let me represent you in your ERC audits?"
Okay, so that's what that email was all about.
Yeah, yeah. So
That's
that's what I
interesting.
started doing, and
You
I
know,
think
that
it's going to be a lot of business come that way. I don't see it happening falling out any other way. There's big money
yeah,
involved. You said there were trillions of dollars. Did you do some research on the
yeah, 2
amount?
trillion, 2
Good
trillion
Lord.
according to Accounting Today. An article last fall.
$2 trillion.
Huge money. Yeah, and you know what? You know what's going to happen? Just like a whole industry popped up with these ERC mills, claim your $26,000 free government money if you employed people during the pandemic. You're going to see a huge boom, I think, with tax resolution companies representing these ERC audit cases.
Oh yeah, I was in Nashville last week with the tax mob, and that's something
Nice.
that we talked about, and it's coming. There ain't no doubt about it. And
Hmm.
you're gonna have to prove that you had it coming to you, or if not, you're gonna owe that money. And you bring up an interesting point about folks that are out of business and whether they'll be held liable personally. Um, I think probably for the trust fund part of it, it's probably could be assessed against someone personally. So when I say trust fund, that's the part
Hmm.
that's withheld out of the employee's check, not the part that the company owed, but what's withheld from the employee. So I can see that happen, Noel.
So just the 7.65% or the 15.3?
Just 7.65. Okay.
Okay.
Yeah.
Yeah,
Yeah.
at least that amount. But I'd be surprised if they didn't go after individuals personally, because that is fraud at the highest level, in my opinion.
Well, I think they're going to cast a broad net, a wide
Hmm.
net, and I think
Hmm.
that's where people are going to be foolhardy to try to approach the IRS on their own, and they're going to need some professional help. So if you're a small business owner out there, and the next year or two you get a notice that you took the advantage of the ERC credit, I'm telling you, when they come in, they're not going to just look at the ERC credit. They're going to look at everything. Okay, they're going to look at make
Hmm.
sure that you report all your income. They're going to look at your meals and entertainment. So
Hmm.
that's why I talked about earlier is you have to gauge for yourself whether it's um, worth the risk of being audited.
Right. Yeah, definitely. It is a big risk, and it's something to seriously consider. And it's going to be a huge topic in the next 6-12 months. Just mark our words. Let me go to another question here that was sent in by Don Williams. He asks, what do I do if I make a mistake on my tax return? What do I do
I
if I
tell
make a
you,
mistake on my tax return?
as a practitioner, we're required if we find a mistake to let the taxpayer know, then it's up to the
Hmm.
taxpayer to amend the return. Not, um, I'm of the opinion if you find a mistake and it's in the government's favor, you just let a sleeping dog lie.
Okay.
If you don't create a problem, um, it's not a problem. So I'm a big believer in not creating problems. So if you don't hear nothing, if you find a mistake on your return, and you don't hear nothing from the government, they ain't here to help you. So I would wait for them to find the mistake. I wouldn't volunteer. That's my take on it. What's yours?
Yeah, most definitely. No, that makes perfect sense. I completely agree with that. And if there is a mistake on your tax return and you need to fix it, you file that amended tax return 1040-X, and pay what you need to pay and be done with it.
Yeah, and it's relatively easy to file, especially if you use a tax program. Most people do, or either I think majority of people probably use a tax program. There's some pay prepared, but you can amend the return and get it right. So if you want to get it right, that's the way to do it. Is file a 1040X.
Mm-hmm. Definitely. Let me move on to the next thing here. Okay, so here's another question for our audience here. Should I take the standard deduction or itemize my deductions?
Back
Common
when
question that comes up around tax season.
yeah, and used to we had to monitor that pretty closely, but they raised the standard deduction to a certain level. The Trump administration did, so that made it where you had to have a whole bunch of itemized deductions to take them, because what you do is measure your itemized versus your standard deduction, and you got to have a lot of expenses, because like your medical is reduced by how much percent of your income is in Noel? 2.5 or
What
7.5. So
for medical
yeah,
expenses?
yeah,
7.5.
7.5. So you have to have 7.5% of your gross income before you can even claim a dollar is going to come off the top of what you pay to doctors and hospitals. So if you have insurance, you're probably not going to pay that much out of pocket. Some of these state taxes, there was a cap put on state taxes of $10,000. That got people over the what for proverbial hump. I'm in Florida. We don't have a state income tax, but if you one of those states like Illinois, I believe you have an income tax there. So but you just have to look and see what's going to be the best benefit for you. Like I say, most of my clients, I don't know about you, but most of them don't qualify for the itemized deduction anymore. Where have you found out?
Yeah, I usually tell people you calculate your itemized deductions. You could do a rough napkin calculation, and you're going to claim whichever is higher. So right now, usually because of the Tax Cuts and Jobs Act, it's typically going to be the standard deduction for most people, and that essentially, it doubled the standard deduction when that came in. But it's going out in a few years here in 2025. What do you think is going to happen then when the Tax Cuts and Jobs Act sunsets? Do you think Congress is going to do something to try to keep those standard deduction limits in place, or are we going to revert back to the old standard deduction limits?
Well, not only is the standard deduction, that's a lot that's on the table to wind up in 2025. I know there's I spoke with a gentleman out of California. He's a colleague of mine, and they already counting on that money for 2025. But I believe Congress will act, but you never know what the government's going to do. But there's a ton, I can't even recall them in my mind, but there's something very, very important this guy was going to do. It has to do with tax strategy, but everything reverts back in 2025 like it was before President Trump came in office.
Yeah, that'll be interesting to see what happens then.
It'll be here before you know it, because we already here in July of 23. That's hard to believe.
Yeah, I think I think it expires December 31st, 2025. So 2026 for that tax filing year, if that's correct, then it goes back to the old.
Congress hasn't got much done, in my opinion, last 3 or 4 years, and just fought between themselves. And you think that they would come together for the better of the country, and not for the party. But the Republicans and the Democrats are both guilty of it, in my opinion. not doing what's best for the country, but trying to look out for the party. And it's really hurt our country, in my opinion.
Yeah, I mean, it would be great if they kept the higher standard deduction limits, and even reinstituted the child tax credits and the other tax credits that were expanded during the COVID years.
Yeah, and
But
I think you'll have one party pushing one way and one party pushing the other. So it's going to be interesting to see what happens. That's for sure.
yeah, until then, I don't think anything's going to happen, like you said. Let me go on another question here. Common question that comes around is, should I do my taxes myself or hire a professional? I mean, I know what I think.
There's many answers to that question, as there are people. I think it's an individual choice.
Sure.
Every situation is different. You have some elderly people that have a simple return, but they're not computer literate, and then you have some business people that are busy trying to make a living. And I think we're at a point in this country, in my opinion, that I don't see how the common person is making it, to be honest with you, because it's taking everything it can to just make ends meet. So
Yeah.
if you run a small business, I don't see how you can run a small business and do your taxes. I just don't see it, because you have to put so much time and energy into making your business successful. And so those who do it, kudos to them, but I don't see how they do it.
Yeah, definitely. For 70-80% of the people with W-2 jobs and just a very straightforward tax situation, I mean, I think they're fine doing their taxes themselves on TurboTax. But what I would just suggest is, every once in a while, every few years, take it to a tax pro, have them look it over. Some offer a free second look. I know H&R Block used to do that. I don't know if they still do. Just to make sure you're not missing anything, because occasionally on these self-prepared returns, and I'm sure you've seen it as well, you find mistakes, missed credits, missed deductions, or phantom numbers that didn't belong on the tax return, that just don't make any sense.
Yeah, and I think that I've been at it long enough now. I kind of see, there's an issue where someone has to fight for the social security disability, and they may get paid 2 or 3 years in 1 year, and it has to all be reported in that year received. But it's hard for the average person to get that right. But if somebody just got a W-2 and some interest or something like that, they should be able to do it themselves.
Yeah, definitely. And for the other people, the other 20-30% who have a semi or complex tax situation, if you're just somebody who's uncomfortable with preparing your own taxes, definitely outsource it. Seek out a qualified tax professional. Let them handle it. You'll sleep better at night.
That's for sure.
All right. So we're coming up on an hour here, Keith. Let me put up this question here. I think this is the last question I have that was sent in. It was from Mike Campos. It says, "Hey man, I've got about $23,000 I owe the IRS. Can I settle this myself?"
Well, I tell you,
that?
it's kind of interesting. I had a lady call me yesterday that owed the IRS only $5,000, and
Okay.
I told her it'd be $2,500 for me to look at it, but she said she didn't care. But I tell you, when they say, "Can I settle it myself?" Enter it into a payment plan, an IRS payment plan. Most people can do that, but if they asking for forgiveness through the Offering Compromise program, then I would say you need a tax professional to help you. So it's just according to how you're going to quote unquote settle it.
Yeah, that's a great point. If they're just trying to set up a payment plan with the IRS, you could do that online very easily at irs.gov/payments. But if you're trying to settle it, you can't do that yourself. I agree with you there.
And I think I want to make a note before we get off of it. Offering compromise to me is a misnomer, and I say that
Mhm.
because the offer part at the front of the in compromise, because it's actually a mathematical formula, and
Right.
it's a good thing that it's that way, because once you get the formula right, it is what it is. It's cut and dried. But you have to get the income less expenses and multiply it times 12, what's left over, and then any equity, any assets, and that's what your offer amount is. But I couldn't do it by hand myself without software. I know how to do it by hand, but I wouldn't even try.
Yeah, tax software for that is invaluable. I don't know how people did the calculations without tax software back in the day. So let me pull this next slide up, Keith. This is one of your graphics that I pulled off of your Facebook page. Keith L. Jones, CPA, the CPA tax problem solver. I love that handle, by the way. Did you secure that or your other handle on the new platform Thread by Instagram? Have you seen that?
What was your question?
Oh, so there's a new social media platform by Meta/Facebook.
Oh
It's
yeah,
called
I haven't got on that yet, but I understand that that there is, and they gonna be a competitor to Twitter.
Yeah. Elon Musk isn't very happy about it. He already sent Meta/Mark Zuckerberg a cease and desist letter.
Did that come out it had to come out in the last week or two, because I hadn't even had a chance to look at it.
Yeah, just if today's Friday, I want to say it came out on Wednesday. It just came
Wednesday.
out. Maybe Wednesday or Tuesday. Or maybe before that, but I just heard about it, I believe, on Wednesday. But it's worth getting
What's it
on there.
called?
It's called Thread by Instagram.
Thread. Yeah. Okay.
And you can sign up to it via your Instagram account. I believe it's only on iPhone right now. But it's worth getting on just to secure your handle. So maybe your name or the CPA tax problem solver.
Have you created your account yet?
I did. I was using the handle Noel Lorenzana CPA. I haven't really. I don't think I'm going to use it. I like Facebook, and I can't be on too many platforms. I just don't have the time for it.
Yeah,
But
you got 2 boys. How old are your boys now?
they're 8 and 10. They're 8 and
8 and
10.
10. Man, they'll be driving before you know it.
Yeah, that's what I hear. They're going to be hanging out with their friends and forgetting about dear old dad pretty soon.
So the 10-year-old, he's in the 4th grade or 5th grade?
He's going into the 5th grade.
Going into the 5th grade.
Mm-hmm.
So he's out for the summer, I guess they are.
Yeah, they're out for the summer. So they're enjoying their summer break, doing a little bit of this and that. But Keith, so if somebody wants to get a hold of you, is this the best website to reach you at? KeithJones.cpa?
I have a online booking calendar that they can reach from that address right there. It's .cpa, which I changed my domain. I think I told you earlier this year.
Mm-hmm.
And so it used to be KeithJonesCPA.com, but that's a good name, a good URL, and the 800 number 844-888-1040 would be
Love that.
Would be a way to get a hold of them as well if they didn't have a computer.
Excellent. Sounds good. Keith, listen, thank you so much for coming on and sharing your expertise and insights. It was really informative, and I really appreciate your time and the opportunity.
Well,
How did you like this? Was this one of your first live streams?
I appreciate you giving me the opportunity, and I know that you I just clicked on your book. I would encourage everyone to subscribe to Noel's channel. If you hadn't already, to subscribe to his YouTube channel. He has some very, very informative videos, and this 10 tips to simplify your taxes is also a good resource as well. So I would encourage everyone to take advantage of both those resources.
I appreciate that, Keith. So, Keith, you currently don't have your own YouTube channel, is that correct?
Well, yeah, I do. I think you got it to me about the same time last year, but I do have a channel, but it's not. I don't publish to it. I don't have the time to. I haven't taken the time to try to build my channel, but I think it's the second most the second highest search engine results in that YouTube, next to Google. So there's definitely some utility to it.
There's a lot of utility, and Google is recommending YouTube videos at the top of its search results. And I know other tax professionals who make who have a YouTube channel, and they make very just straightforward, no frills videos. And one guy, Michael Sullivan, who you know from the Tax Mob, obviously we both know him. His channel is it's gone gangbusters. I think he's probably at 10,000 subscribers, and he just has a very basic video format. He just uses maybe his computer, maybe a microphone, and he just talks off the cuff for about 5 minutes, just sharing his insights. And it helps that he was a former IRS agent, so he's got a lot of valuable information to share.
Yeah, I after we spoke earlier today, we'll text back and forth. I noticed on he put out a video about the ERC credit.
Mm-hmm.
So he believes they're coming too.
Yeah.
The IRS is.
Yeah, definitely. I agree with that. And if anyone out there, if you have tax problems, reach out to Keith. He could definitely give you a hand, give you a free consultation, see if it's something that he can help you with. But definitely, if there's any takeaway from this live stream video, is that if you have a tax problem, there is a solution. There is a solution. And more often than not, it's not something that you want to tackle on your own. So
seek out a tax professional. The worst thing you can do is ignore the IRS. If they send you letters and you just not even open them up, you're going down the wrong road.
Yeah, definitely. Okay. We didn't get that many comments here, but there is one here from Here with the Popcorn. Noel, number 1.
Okay.
Thank you very much for the comment.
Looks like it might be a family member.
I don't think so. I don't think any family members of mine watch my YouTube videos. My wife won't even watch them. But Keith, seriously, you should start your own. Well, you already have a channel, but you should get on YouTube, share your valuable information just like you did here. And, before you know it, you're going to build a huge following, and you've got a lot of good information to share. And that's all what people care about. They care about the information, the value, and, authenticity. And if you could deliver those 3 things, a guy like you could totally blow up on YouTube. And it's a great avenue for generating leads and people who need help. And
yeah,
that's what you're looking to do.
Need to apply myself a little bit more. It seems like there's only so much time of the day.
Yeah, definitely. But don't overthink it. Just, I'm sure you've got a MacBook. Go to the YouTube Studio app and just hit record. That's all it takes.
So you don't even, so these lives you do them every week now?
No, this is my technically 3rd live that I've done. The first one I did on my own. It was breaking news about the 1099K, that $600 threshold, that being pushed out for another year. I did a live on that, and I did another live a couple weeks ago about a luxury watch dealer, and that seemed to do pretty well because that was a bit of a hot topic.
No, we got a question here from
Okay.
here with the popcorn, and it's a good question. I think we need to answer it before we break free.
Sure.
He asked, when it comes to IRS issues, when do you want a tax attorney versus CPA? And my
Good
take
question.
on it is, you don't need a tax attorney unless it's something that's criminal
Yeah.
in nature. That's my opinion. Because it's just not necessary. And I think you need to be, that brings up another segue, Noel, as we leave here. But whoever, I distribute a book. It's Roadmap to Tax Relief. But one thing it talks about is some questions you should ask a person that, say, if you have an IRS issue, you need to ask that person, how many cases has it done? How much experience do they have? Because it's not something that you just can dabble in. You have to really know your stuff. And of course, everybody has to learn. But you want to make sure whether you get an attorney. Like I said, I don't think you need a tax attorney unless it's something criminal. But whoever you hire to help you, they need to be well versed in all the IRS issues.
Yeah, I agree. And oftentimes somebody will reach out and say they're looking for a tax attorney. If I know anybody, and I'll ask them, I might know somebody, but back up and tell me what happened. And more often than not, it's something that I could help them with, or even an enrolled agent. Usually it's not overly complicated, and I agree with you. Definitely seek out an attorney if it's criminal. And maybe in general, is creating legal entities. Have an attorney help you with that.
Yeah, and also you can, if you have your CPA work through an attorney, there's something called a Covell agreement, and that allows we don't have the same confidentiality as CPAs as an attorney privilege has, but if we work under the auspices of the attorney via the Covell agreement, that gives us the protection when it comes to the client privilege that attorneys are afforded.
Yeah, definitely. The Covell agreement for attorney-client privilege. I've heard of that as well. Great information. Keith, what did you think of this streaming platform? It's not StreamYard, and that's probably one of the more popular ones. This is actually Streamlabs Talk Studio. It's not bad, right?
No, it works. I think it works pretty good. So what platforms are we streaming on right now?
We're just streaming live on YouTube.
No, live on YouTube?
Okay. I had the option to stream on Facebook, but I just opted to keep it on YouTube. But
this platform you got, what platforms that you're using today to stream? What platforms will it stream on?
It could stream on, let me think here, Facebook. I'm not sure what other options it had, but definitely Facebook. Maybe
is that the Melon app?
Yeah, it's exactly what it is. It was a lifetime deal Melon app from AppSumo.
So I've already got it too, but I've never used it.
Well, here you go. Well, this is a good demo for you. If you ever wanted to do your own live stream, you've already got the back end software to do it. It wouldn't cost you a dime.
You won't believe the software I got. I haven't been on the Facebook group in a while, but how's that group going with the lifetime deal? Did it come into any good deals lately?
No, I think the lifetime deal market has become oversaturated with a lot of not so great companies who maybe are looking to make a quick buck with not fully developed software. And you've got a lot of lifetime deal companies who have been closing shop. So people who invested in those deals, got left losing money, holding the bag, if you will. So it's become a really tough thing to dabble in right now. I personally have stopped buying lifetime deals
Did you
through
did you get that big marker webinar program?
I do have that, and webinars are on my to-do list, and I do have that at my disposal when I need to run webinars. And I know other accountants use Big Marker for webinars, and it works well.
Yeah, I got it too. I've also got Jet Rocket or something like that, but I got another one too.
Excellent, excellent. Keith, let's cut the live stream off here. If you want to stick around for a few minutes, we can chat after the live stream. But you guys, thanks for checking in with us and viewing the live stream with us. We really appreciate it. Hope you got value. Consider liking, subscribing, and supporting the live stream. And definitely give Keith a call if you have any questions regarding IRS tax issues. Any last words, Keith?
Yes, sir. I appreciate you having me again, and I'm good to see them boys growing up. They'll be grown and gone before you know it, man. I can remember when they was just toddlers.
Yeah.
It seemed like yesterday.
Definitely. Next time we come to Florida, we'll try to swing by your neck of the woods.
Yeah. So I'm only about an hour and a half from Orlando.
Okay, that's probably where we'd end up going. So
Yeah,
next time,
I'll go to Disney World, huh?
Exactly. While the kids enjoy it, it's a great place. And the last time we were there, it was quite hot. And I was going to ask you, you're in Florida. Has it been getting hotter in Florida, or am I just getting older and more sensitive to the heat?
Well, I live right on the water, and I've been in Florida all my life now. So I went to Nashville. I said last week, but man, it seemed like the heat in Nashville was like an oven, and it's more humid here in Florida. But it doesn't really bother me because I've been here all my life. But they said July 4th was the hottest day we ever had, so in the whole world. Did you hear that?
Wow.
Yeah,
Something like that, right? So that's nice. You're by the water, so you've got the ocean breeze to keep you cool.
Yeah, and the water, it keeps it from being too hot, and it keeps it from being too cold, so it keeps it more moderate because you got a big Atlantic Ocean out there, and so if it gets cold in the winter, it's tempered down by the warmth of the sea, and then when it gets hot in the summer, it's tempered down because the sea is cooler than what the area is. So I can see the Atlantic Ocean right from where I'm at.
That's amazing. That's great. That's the way to do it. All right, sounds good, Keith. Thanks for joining me, and everyone who's watching, thank you so much. Appreciate the support, and we'll see you guys again soon.
All right, thank you, Noel.
All right, take care. Bye-bye, everybody.
Bye-bye.